Something is happening in the silver market right now, and the numbers are not matching the story. Because as of today, silver is trading around $73.50 to $74.50 per ounce, holding in a tight range after one of the most volatile moves we've seen this month. But here's where it gets strange. Just hours before this, silver actually surged aggressively, touching levels near 77.6 to 77.8 intraday, a sharp move of over 5% in a single session, before giving most of it back. And now, it's just sitting there, not breaking higher, not collapsing, just holding. This kind of price behavior is not normal, because typically when a market spikes that fast, especially on a major geopolitical headline, it either continues the trend or reverses sharply. But today, April 9th, silver is doing neither. Instead, it's stabilizing around $74.11, down slightly from yesterday, but still holding above key support levels. And that creates a contradiction, because the reason for that spike was clear. The US-Iran ceasefire talks. When that news hit the market, everything reacted at once. Oil prices dropped sharply, the US dollar weakened, bond yields pulled back, and silver surged. That makes sense. Because when oil drops, inflation expectations tend to cool. When inflation cools, markets start pricing in the possibility of softer monetary policy. And when interest rate pressure eases, metals like silver usually benefit. That's the textbook reaction. But what happened next is where the real story begins, because the rally didn't hold. After hitting those highs near $77, silver quickly pulled back and settled back into the low $74 range. And that tells you something important. This was not a clean breakout. This was a reaction, a fast, aggressive, headline-driven reaction, followed by hesitation, and markets only hesitate like this when they are uncertain. Now let's break down what's happening underneath the surface. Because today's price action is not just about one event. It's about multiple forces colliding at the same time. First, the ceasefire itself is fragile. Even though negotiations are ongoing, tensions haven't fully disappeared. Markets are still trying to figure out whether this is a temporary pause or a real shift in geopolitical risk. And that uncertainty is keeping traders cautious. Second, the US dollar, after weakening during the initial reaction, the dollar has started stabilizing again, and that matters because silver is priced in dollars. A stronger dollar typically puts pressure on metals. Third, interest rates. The Federal Reserve is still in a difficult position. Inflation hasn't fully cooled, and policymakers have signaled that further tightening could still be on the table if needed. That creates a conflicting environment because normally, higher rates, bearish for silver, lower rates, bullish for silver. But right now, markets are not sure which direction comes next, and when that uncertainty exists, prices stop trending clearly, they consolidate, which is exactly what we're seeing today. Now here's where it gets even more interesting, because despite this short-term confusion, the bigger picture is not weak. Silver is still up more than 130% over the past year, even after recent pullbacks. That's not a small move. That's a structural shift. And historically, when an asset shows that kind of long-term strength, short-term volatility doesn't mean weakness. It usually means transition, a phase where the market is trying to decide its next direction. And right now, that direction is not obvious, because on one side we have cooling inflation expectations due to falling oil, a slightly weaker dollar compared to previous weeks, strong industrial demand supporting silver. But on the other side, profit-taking after a sharp rally, uncertainty around the ceasefire, ongoing pressure from interest rate expectations, and this is why silver is stuck. Not weak, not strong, just waiting for confirmation. Because markets don't move based on what already happened. They move based on what comes next. And right now, that next move depends on something very specific. Whether this ceasefire holds or breaks. Because if tensions rise again and oil spikes back up, inflation fears could return quickly. That would push bond yields higher, strengthen the dollar, and potentially pressure silver again. But if stability continues and inflation expectations ease, then silver could find support and attempt another move toward the $78 level, which is currently acting as a key resistance zone. So what we're seeing today is not random. It's a market at a crossroads, a market reacting to headlines, but waiting for confirmation from fundamentals. And this is where most people make a mistake. They focus only on price, 72, 74, 78. But the real story is not the price, it's the behavior. because when a market spikes, pulls back, and then holds its ground instead of collapsing, that usually means one thing. There is still underlying support. Not obvious, not aggressive, but present. And that's exactly what makes this moment important, because this kind of structure doesn't last forever. Eventually, it breaks, either up or down. Now, here's where the story starts to shift, because what we've discussed so far, price, volatility, ceasefire, that's only the surface. The real pressure in the silver market is not coming from headlines. It's coming from something much quieter. Supply, because while traders are focused on whether silver breaks 78 or drops to 72, there's a different battle happening in the background. A physical one. Recent reports indicate that global demand for silver is increasing, especially from major economies like China, where accumulation is accelerating. And historically, when large economies start increasing physical demand, it doesn't happen randomly. It usually signals long-term positioning. This is not short-term trading. This is strategic behavior. And here's why that matters. Because silver is not just a financial asset. It's an industrial metal. It's used in solar panels, electronics, electric vehicles, which means demand is not only coming from investors, it's coming from the global economy itself. And according to multiple analyses, industrial demand continues to rise, particularly from Asia, even as prices remain volatile. Now think about that for a second. If demand is increasing and supply is tightening, then price doesn't need to explode immediately. It can do something else. It can stabilize, absorb pressure, and build a base, which is exactly what we're seeing right now around that $73, $74 zone. But here's the part most people miss, because supply tightening doesn't show up instantly on charts. It shows up slowly, quietly, through behavior, through reactions, through moments like this where price refuses to break down, even when conditions suggest it should. Now, layer that with something else. Liquidity, because global liquidity conditions are not as simple as they look right now. On one side, central banks, especially the Federal Reserve, are still dealing with inflation that hasn't fully disappeared. On the other side, economic growth is slowing in key regions, and according to recent insights from the International Monetary Fund, global growth remains stable but fragile, with risks still tilted to the downside due to geopolitical tensions and financial tightening. That creates a very specific environment, a fragile equilibrium, where inflation is not fully under control, growth is not fully stable, policy direction is not fully clear, and when all three are uncertain at the same time, markets don't trend cleanly. They hesitate, they compress, they build tension, and that's exactly what silver is doing right now. Now let's connect this back to price, because technically silver is sitting in a very tight structure. Support is forming around $72, $73. Resistance is building near $76, $78. And markets right now are asking one question: which side breaks first? Because if silver breaks above that $76, $78 zone, it could trigger a continuation move, not guaranteed, but historically, breakouts from consolidation phases often lead to expansion and volatility. But if it breaks below $72, then the entire structure shifts, and we could see a deeper correction, especially if the dollar strengthens or rate expectations rise again. And this is where things get even more interesting, because technical indicators are not giving a clear signal either. Some forecasts suggest silver is still under bearish pressure, with moving averages pointing toward downside risk, even while price attempts short-term recoveries. So now you have a situation where fundamentals are mixed, technicals are uncertain, geopolitics are unstable, and yet price is holding. That's not random, that's compression. And compression in markets rarely lasts. It leads to expansion. A move, a break, a decision. Now here's an engaging point you need to think about. If silver was truly weak, why didn't it collapse after rejecting 77 cents? If silver was truly strong, why didn't it continue above 76 taus? Because the answer is not in the price. It's in the positioning. Markets right now are not fully committed, not bullish, not bearish. They are waiting for confirmation. And that confirmation is likely to come from just a few key triggers: stability or breakdown of the ceasefire, direction of the US dollar, signals from central banks, and most importantly, liquidity conditions. Because at the end of the day, silver doesn't move because of one factor. It moves when multiple factors align. And right now, they haven't aligned yet, which means this current phase is not the move. It's the setup. At this point, the market is no longer reacting. It's deciding. Because what we're seeing right now in silver is not movement. It's compression. And compression in financial markets doesn't stay quiet for long. It builds pressure and then it releases. Now let's break this down clearly. Right now, silver is trapped between two levels. Support around 72.73s, resistance around 76.78 $, and this range is not random. This is a decision zone because above 76.78, the structure changes, and below 72, so it's the structure breaks. So the real question is not where is silver now? The real question is which side breaks first? Now here's where it gets serious. Because historically, when silver enters a compression phase like this, it usually follows a strong trend before it. And that's exactly what we had. Silver has already delivered over 120% plus gains in the past year, driven by tight physical supply, strong industrial demand, weakening dollar trends, and geopolitical uncertainty. That kind of move is not normal. That's not short-term momentum. That's a structural shift. And when markets move like that, they don't just reverse instantly. They pause, they consolidate, they reset. And that's what we're seeing right now. But here's where things get even more interesting. Because this current phase is not just technical. It's psychological. Let me explain. Retail traders are confused. Short-term traders are taking profits. Institutions are watching, not reacting. And when that happens, price stops trending. It starts waiting for clarity, waiting for confirmation, waiting for a trigger. Now here's an engaging point you need to think about. If silver was weak, why is it still holding above $73 after rejecting 77s? If silver was strong, why didn't it break and hold above 76? Because the answer lies in something deeper. Positioning. And this is where smart money behavior starts to matter. Because large players, institutions, funds, central entities, they don't chase headlines. They build positions over time, slowly, quietly, without moving the market too aggressively. And this kind of sideways movement, this tight consolidation, this refusal to break down sometimes reflects accumulation, not always, but historically, often. Now let's connect this with something even bigger, the global system, because silver right now is not just reacting to ceasefire talks, dollar movement, interest rates, it's reacting to a shift in global structure. We are moving into a phase where supply chains are being restructured, countries are securing critical resources. Industrial demand is rising from clean energy, AI, and defense sectors. And silver sits right in the middle of that, which means this is not just a trade. This is positioning for the future. Now let's talk about the two scenarios, because from here, the path splits. Scenario 1, breakdown. If silver breaks below 72, then this entire structure weakens. And that could happen if the US dollar strengthens sharply, interest rate expectations rise again, or geopolitical stability holds longer than expected. In that case, silver could correct further, not collapse, but retrace. Because after a 100% plus move, pullbacks are normal, healthy even. Scenario 2, breakout. But if silver breaks above 76.78, then everything changes, because that level is not just resistance. It's a trigger, a psychological barrier, a structural ceiling. And once that breaks, it could open the door for continuation, not guaranteed. But historically, breakouts from compression phases often lead to expansion moves, fast moves, volatile moves, decisive moves. Now here's the key insight. Right now, we are not in the move. We are in the setup, and setups are dangerous because they look boring. They look slow. They look like nothing is happening. But in reality, everything is building underneath. So the next time you look at silver sitting quietly around 74, don't think nothing is happening, because something is. You just can't see it yet. And this brings us to the most important question of all. Not where silver is today, but what kind of market we are entering next. Because this is not just about price anymore. This is about transition. At this point, everything comes down to one thing, not headlines, not predictions, but confirmation. Because what we're seeing right now is a market caught between two realities. On one side, a temporary sense of relief. A ceasefire, announced on April 8th, brokered under pressure, reopening parts of the Strait of Hormuz and calming markets, at least on the surface. On the other side, a reality that hasn't changed. Because even today, oil prices are rising again. Global markets are unstable. And the ceasefire itself is already being questioned. This is not stability. This is hesitation. And markets can feel that. That's why silver is not trending cleanly. Because the system itself is not stable yet. Now step back for a second, because this is bigger than silver. We are entering a phase where geopolitical tensions don't fully resolve, they pause, inflation doesn't fully disappear, it lingers. Central banks don't fully ease, they hesitate. Even the Federal Reserve is still balancing inflation risks with slowing growth, while global institutions continue warning about fragile economic conditions. And when all of that happens at once, markets stop behaving normally, correlations break, trends weaken, volatility increases. Now here's where it all connects, because silver sits right at the intersection of all of this. It reacts to inflation, interest rates, industrial demand, global uncertainty, and right now, all four are pulling in different directions, which is why price is not giving a clear answer. And here's the moment you need to pay attention to, because this is not just another consolidation. This is pressure building. Think about what just happened. A massive spike towards 77 pleasants, a sharp pullback. And now, stability around $74, that's not weakness. That's structure forming. And structures like this don't last, they resolve. Today is April 9th, 2026. And silver is not telling you what will happen next. It's showing you that something is about to happen. Because markets don't stay in uncertainty forever, they choose a direction. Now ask yourself this. If the ceasefire breaks and oil spikes again and inflation fears return, what happens to silver? If stability holds and rate expectations soften and the dollar weakens, what happens then? Because both scenarios are possible right now. And that's exactly why this moment matters. This is where most people get it wrong. They wait for confirmation after the move already happens, but markets don't reward certainty. They move before clarity. And that's why this phase, this quiet, slow, confusing phase, is often where the biggest decisions are made. Not when price is exploding, not when everyone is talking, but right now, when things feel unclear. So don't just watch the price, watch the behavior. Watch how silver reacts to news. Watch how it holds or breaks under pressure, because that reaction will tell you more than any headline ever will. And here's the truth most people won't say. This may not just be about silver anymore. This may be about a shift in how markets react to uncertainty, a shift in how capital moves globally, a shift in how the system itself is evolving. And if that's true, then what we're seeing right now is not the move. It's the beginning, engagement ending, high retention CTA. So now I want to ask you something. Do you think silver breaks above $78 first or drops below $72? Because the next move may not just define silver, it could define the entire market direction from here. Comment your view below. And if you want to stay ahead of moves like this before they happen, make sure you subscribe, because the signals are already there. Most people just aren't seeing them yet.